Hello and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Srishti Sharma and with me Cheryl D'Souza. And viewers, you know that this is the show where you get all your stock-related queries answered by the experts. So do get ready for that. But let's have a look at what the markets are up to. So Cheryl, almost 1.5 of the trading, 1.5 hours of the trading session, and the market seems to be drifting from the day's highest points. But nevertheless, the IT is the biggest drag in today's trading session.
Absolutely. A very good morning to you, Shrishti, and I must say Thursday is the new Friday, isn't it? Because we have Pathshala for all of our viewers, but let's not forget about what the markets are doing, and we are indeed at the day's lowest point right now, but Nifty is holding above that 17,750 mark as we speak. Talking about banks, that one is outperforming the benchmark indices, is trading in the positive territory with gains of about 0.2%. And like Shrishti mentioned as well, the top drags today on the Nifty has to be the IT counters, and IT index itself is down about 2.3% as we speak. So Tech Mahindra, Infosys, HCL Tech, TCS, all of them are the top 4 losers on Nifty. You have BPCL, and then you have again Wipro that is declining in trade. So all of the tier 1 IT companies are actually declining in today's trading session. Talking about the list of gainers is Apollo Hospitals, that's seeing gains of upwards of about 2%. You have Eicher Motors also that is gaining 2%. HDFC Life, Nestle as well as Britannia also seeing good gains in today's trading session. So talking about the sectoral indices, like I mentioned, IT index top sectoral loser. Metal, pharma also seeing some sort of a decline in trade today. But on the flip side, you have realty index that are holding on to mild gains of about 0.4%, followed by FMCG index. But yes, all eyes on the IT index, the IT stocks, especially TCS. And to talk more on what exactly is happening with TCS and how has the performance been of the company in the quarter gone by, we have Anisha joining us on the show. Very good morning to you, Anisha, and I'm sure you are having a marathon run when it comes to TCS right from last evening to this morning. But yes, this time what happened to the numbers?
Yeah, TCS and then Infosys in the evening, so that marathon really continues. But yes, it was a bit disappointing when it comes to TCS's earnings this time around, and it really stemmed from the top line itself, when the constant currency growth came in at 0.6% versus street expectation of 1%. And remember, the growth rate has been the slowest that we have seen at least in the last 10 to 12 quarters. So quite a bit of weakness on the top line. The management did acknowledge that the growth rate was slower because US saw a more than expected slowdown, and from February onwards there was a sudden turn in the sentiment, and that's why the decision making has been delayed, plus the ramp up in execution is something which is seeing quite a bit of impact, and that is the reason why margin also disappointed, because margin stayed flat quarter on quarter. We were expecting there is going to be a 50 basis point improvement. That hasn't happened, and that means that the aspirational band of 26 to 28% has been pushed further down the line for the company. The only silver lining, if you must, was the fact that the deal win momentum was quite strong. At $10 billion, there is no complaint coming in as far as deal pipeline is concerned, but there is definitely a dichotomy with respect to how the ramp ups are happening versus what the deal pipeline is telling you. Valuation wise as well, the stock is reasonably priced to say, because it's trading at what, 24 times forward earnings. The peak was 34 times, but if you look at the 5-year average, that continues to be around that 25 level mark. So there is not much room available on the downside, that it's available at very cheap valuations, etc. And the brokerages too have cut down their estimates by around 1 to 2%. They don't like the fact that there is no clarity as to where the growth is headed. Is there going to be a recovery in the second half or not? But the management commentary was, telling us that there is a bit of impact coming in the US, though it's not contagion as of now. But definitely there is a slowdown and caution and risk averseness when it comes to client spends.
Okay, thank you so much, Anisha, for telling us what to make out of the TCS numbers and what is the management commentary like. But like you were mentioning on the management commentary, for our viewers, let's also listen into the word coming in from the TCS management, where they believe that despite the global uncertainties, TCS is still aspiring for a double-digit growth in FY24.
So, Samir, while we can judge the numbers by saying that, okay, it was the slowest quarterly growth in last 10 quarters, margins were under pressure despite the currency tailwind. One thing is clear, if I summarize by saying the next 2 or 3 quarters would be hard to call given the macro dynamism. Will that be a fair assessment?
Yes, given the uncertainty, we would believe that we'll have to play it one step at a time rather than taking a forward view on it.
And it will be tough to get double-digit growth in FY24.
No, I would still aspire to get to double-digit. Depends on how it plays out.
Right, so that was the management commentary on the numbers, as well as you had Anisha actually give you a whole lowdown on exactly what transpired in the quarter gone by for TCS. But let's bring on board Avinash Gorakhshekhar to understand more about TCS and do the fundamentals change with the fact that this quarter was a miss for the company. Very good morning to you, Avinash. Thank you so much for joining us on ET Now. Your first take on TCS's earnings, and also do things change in your analysis for TCS and also the IT sector?
Yeah, good morning, Cheryl. I think TCS numbers yesterday, were in line, but I think there was a little bit of disappointment on the margin front. And I think despite the deal, pipeline being pretty strong, I think what the market is little concerned about is that whether the growth momentum would continue in FY24. I think looking at the kind of headwinds in US and Europe, and plus given the fact that the US banking sector is still in a very large kind of relative crisis, I would not be surprised that growth is now going to be a little muted. Probably we could see single digit growth coming in from the US market, especially from segments like BFSI, which account for a large chunk of not only TCS revenue but even for the entire IT sector. So I think, for 15% overall, 14-15% earnings growth, a P multiple of 24-25 times looks a little bit stretched. So I think the markets would obviously give it a high P multiple once the earnings growth trajectory picks up, which possibly could happen maybe after the next couple of quarters. So I think it's better to hold on and better to wait. I would not be in a hurry to buy TCS at this point of time, although I believe that long term, the value looks definitely promising. But in the near term, the headwinds still continue.
Thank you so much for that, Avinash, for giving us your take on TCS's earnings and what you make of it. But today being, like I mentioned, Thursday is the new Friday. Given the fact we are seeing a truncated week, we have a holiday tomorrow. So we've decided to have the BNS and Pathshala edition today. And Kunal is joining us with something new, isn't it, Kunal?
Well, yes, Cheryl, and so the topic for today's Pathshala is on gap up or gap trades. Now, typically we've seen gaps happening for stocks, indices, as well as various asset classes. But then how do these gaps, in specifically the up gaps, do they act as strong supports, or are they points where the market reverses and these are froth which gets generated into stock prices? So we'll see two examples over here. The first one which we've looked out for is Divi's Lab. Now, remember that this has been a stock which has been beaten down significantly in the last 12 months or so. Now, one of the reasons why I think Divi's Lab managed to just absorb into a major bottom formation zone is this gap which had formed into the stock price. This was in 2020 when the stock formed a gap at 2,800 levels to almost 3,100 mark. Now, remember post this, the stock went into a breakout mode. It went up higher, retested the gap, could not close the gap, and then started going to an upward trend. Even on the way down, this gap, this gap zone acts as a major support. So if you've seen the last 1.5 or 2 years of major correction for Divi's Lab from 5,500 levels to almost 2,800, the correction ended at this major gap zone, which means that it was more like a mean reversion which happened for Divi's Lab, and the stock ended a major correction over here. Now it's in process of starting a very strong uptrend, which I believe could probably take maybe another few months or few quarters or over the next couple of years. The second example is Tata Motors, but this is more of a constraint or a shorter term time frame. Again, two classic gaps over here. One which was formed in 2023 start when the stock started to revive from the sub 400 mark. This was a point where the stock got into a gap up mode. It went up higher, retested the gap, went up higher, and then the second phase of correction which ended just closer to this gap support for Tata Motors. And the second gap, as you can see, which is formed just over here for the stock price, which means that even if the stock consolidates over here, takes support at this 460 mark, we can expect the stock to get up into a strong up move and even cross back about the 500 mark. So this could be a major zone of support for Tata Motors for a short-term trader.
Was indeed a very interesting and an important topic. Thank you so much, Kunal, for getting us this particular information for all our viewers, wherein how to trade a gapper, because I see a lot of experts using this one, and how to exactly trade on this one. Thank you so much for highlighting that. But with this, viewers, it's time to slip into a short break, but you don't go anywhere, because as we come right back, it's the time to take all your stock-related queries, so stay tuned.
You can connect to us. We are live on YouTube. We are live on Twitter as well as Facebook. You can write to us on the WhatsApp number that will be flashing shortly on the top of your screen. Do mention your name, the stock you're looking to invest in. If you're already invested in, then do mention the time horizon, the quantity, as well as the buy price that you purchase the stock. That will help our experts help you better. So before we get going with your queries, we have today Kunal Bothra as well as Avinash Gorakhshekar joining us on the show. Once again, good morning to both of you all. And Avinash, coming first to you, what should investors keep in mind in this sort of a market scenario in order to keep their wealth protected?
No, I think Cheryl, in this market, one has to be slightly long-term oriented. I think the markets will continue to be volatile. For the last 8 to 9 days, we have seen a continuous rally. So I think today markets have corrected. Obviously, some sort of profit booking has happened, but I think they need to build a portfolio over the next, say, 3 to 4 years. And I think it's better to focus on the large caps as well as some quality mid caps and follow a disciplined process in doing a kind of a systematic investment plan. I think ups and downs in the markets would come and go, but I think longer term wealth creation will happen if all investors follow a disciplined method of SIP investing, and which eventually will lead to a lot of wealth creation for them. So I think one should be a long term investor. Don't take a hasty call on the short term approach in the markets, and that is definitely the right way to invest in these kind of markets.
So that's the advice coming in for all our retail investors. But with this, let's kickstart taking all your stock related queries. And the first question that I have is coming from Padmasiv Rao from Bangalore. And Kunal, let me take it up from you because he wants to know, is this a good time to enter into ICICI Prudential? Because what I see, the stock has seen a stellar recovery, but this particular level at 440 odd rupees, this has been a key support in the previous session. So can this act as a resistance, and what to do next?
Well, I would believe that the stock is going through a very narrowed kind of an upward trend. It's not a major uptrend which has happened for ICICI Pro, which means that the stock would still remain under pressure for some more time. I think 475, which was the previous swing high for the stock, that should act as a major resistance for the stock price. So I'm not sure if you're looking out for a short-term kind of a trade and maybe playing out for 15-20 rupees on the upside. If that's the case, then you can go for it. But 475 could be an upper end of the target which you can look out for ICICI Pro.
All right, this one is coming in from Krish, and this one is particularly for you, Avinash. He wants your view on ESAB India. He has 35 shares at a price of 3,900 rupees per share. He's saying he can hold on for 3 more years, and he's saying that he can also look to average about 20 more stocks. So what's your view on this on the fundamental side? How does ESAB India look to you, and is it a stock that he should stay put with?
Yeah, I think ESAB is a multinational player operating in the welding and engineering space. And I think as the investor has taken a 3-year kind of time horizon, I would believe that, this is a company which is going to grow as the general economy grows, because this is a sector, the welding and transmission sector is dependent on how corporate capex gets built up in corporates and how fresh investments come in the economy. So I think they have a large list of a lot of infrastructure customers, as well as a lot of construction companies. So I think all said and done, with a strong order book, with virtually no debt on the books, and with a very strong technological kind of collaborator, I would believe that in the years to come, the company's business would grow quite well. So I think keep on holding, and wherever the stock corrects, I think it's a good opportunity to buy on declines, but keep a time frame of at least 2 years plus.
Okay, moving on, and Kunal, this question is specifically for you. The question is from Satya Veni, and he wants to know, good time to enter Delta Corp and Poonawalla FinCorp. What are your views on both of these counters, and at what price he should make an entry if you advise for the same?
So Delta Corp I would not advise, because the stock has been into a sharp downtrend. Doesn't look like that immediately on the charts there could be any major recovery. So I would probably suggest to avoid Delta Corp. But for Poonawalla FinCorp, I think at current levels of 290, 291, the stock is going through a huge time-wise correction. I think over the last 4 or 5 months, the stock has been just guiding at this 200 DMA, 290 level for the stock price. So which means that it's finding a good support at these levels. So current levels could be a good zone to buy Poonawalla FinCorp, and Delta Corp I would suggest to avoid, given the lackluster chart the stock has been showing over the last many months.
Okay, Avinash, this one's from Ramachandran. He's writing to us from Thrissur, and he has IRCTC about 3,000 shares, which he purchased at 780 rupees per share. Now, right now, the stock is way below his buy price. But okay, I believe I will take this query to you then, Kunal, because we seem to have snapped the line with Avinash. So IRCTC, 3,000 shares at a price of 780. He wants to know whether he should continue to hold on to it or switch to some other railway stock altogether.
I think you should hold on to IRCTC. In fact, you've bought at a much lower price of 780. So adjusted price, I think, is far lower as compared to the rally the stock has seen in the last many months. In fact, sorry, 780 is a higher end of the price, but then nevertheless the stock looks a bit more attractive. 580, 575, I think was the previous swing low for IRCTC. The stock has been divergent from its long-term averages. I think if I'm not wrong, it's almost 15% lower from its 200-day moving average. So there has to be a possible mean reversion rally for IRCTC. If that happens, the stock should come back towards 650 at least. So hold is what I would recommend. If possible, look to average closer to 575.
Okay, Kunal, the next question is from Venkat Rao, and though he's a long-term investor, seems like he's been holding Divi's Lab and Deepak Fertilizers for long, because he entered Divi's Lab 70 shares at a price of 4,140 rupees and Deepak Fertilizers at a price of 815 rupees. Wants to know, is this a good time to average both of these counters since he's at a loss?
Well, yeah, I would suggest to average both of these stocks. Divi's Lab specifically, I think just showed a strong charts on the gap theory as well, that how Divi's Lab has completed a major mean reversion. So 2,800 is a huge support for the stock, and assuming if that support is not broken on a monthly basis, we can expect the stock to get into strong recovery. Deepak Fertilizer as well, I think, could be a stock which you will look to average out. Now the only concern is that there are other fertilizer stocks which are also looking very attractive. So I'm not sure whether you're just keen towards one stock from the fertilizer pack. But even if that's the case, then you can look to average Deepak Fertilizer. If not, then you can probably add more fertilizer stocks into your basket as well.
Alright, so that's the view coming in on Deepak Fertilizer and the fertilizer pack. But on that note, let's slip into a break on this edition of Buy Now Sell Now. When we come back, we'll be taking more of your queries, so don't go anywhere.
Welcome back to Buy Now Sell Now, a show where you get all your stock related queries answered by the experts. And continuing with the same, the next question that I have is for you, Kunal. This question is from Ananta Krishnan from Madurai, and he bought 500 shares of Laurus Lab. The stock which saw a great move yesterday, but he entered at a price of 320 rupees per share. He wants to know the short-term prospects on the same.
Well, I've been advocating a sell on Laurus Labs. Even after yesterday's move, the chart patterns have not changed significantly, except for the fact that it closed above the 50-day moving average yesterday once, but today the stock has come back below the 50 DMA. So that again would probably question the yesterday's up move for the stock price. So not a fan of the stock. I would recommend that maybe if it comes back to your cost price or slightly in profit, I think it's a good time where you should look to exit. If you're looking to switch to some pharma name, then I would recommend maybe a Divi's Lab, Lupin if you're a long-term investor, or if you're looking out for the mid-cap names, then I think Glenmark Pharma and Zydus Life. These are the 4 names which you should concentrate on.
Okay, this one is coming from V. Mathur. He's a senior citizen. He's writing to us from Delhi. He's a long-term investor as well, but there are loads of stocks that he has sent us, but let me take 2 out of those. He wants to know whether he should continue to stay put with Asian Paints, Avinash. He has about 90 shares purchased at 3,183 rupees per share. And also he has Escorts Kubota, about 245 shares at 882 rupees per share. Both of these counters have fallen, actually both of these counters right now are in the consolidatory phase. At least that's what you can say for Asian Paints. Escorts has actually risen sharply from his buy price. What should his strategy be for the long term now? Stay put with both of them or look to exit one?
No, I think Cheryl, he can continue to hold on both the stocks. See, Asian Paints, our sense is that over the next, say, 12 to 15 months would obviously find a lot of competitive intensity increasing, because a lot of new players are going to enter the market. But I think looking at its logistic advantage, looking at the kind of market share it commands, if the investor has a 12 to 18 month horizon, he should hold on. Our sense is that Asian Paints will be able to ward off this competition quite successfully. And as far as Escorts Kubota is concerned, I think he's already in the positive. Here also, I think the company's profile as well as its export strategy is going to change dramatically with Kubota coming in. And Kubota has said that the Indian company, that is Escorts Kubota, is going to be made as an Indian outsourcing base. So I think over the next couple of years, both these stocks can be held on. I think if he's not in a hurry to book out profits in Escorts Kubota, you take a 12 to 18 months here also and continue to hold.
Continue to hold on Escorts Kubota. But the next question, Kunal, is from Jay Krishnan, and he bought shares of ABB India, and we were just discussing about the whole sector yesterday, and he recently entered into the counter at a price of 3,320 rupees. What should he do now? And if that's advice coming in for hold, then till what level he should be holding this particular counter, and what is the medium-term outlook on the same?
See, I would suggest to wait out for maybe just about a day or two more, because yesterday and today the stock seems to be just retesting the 50-day moving average. Yesterday the stock closed at the lowest point of the day and it tested the 50 DMA. Today also the stock is doing the same. Now, in case if the stock breaks below today's low, for example, if it crosses the 3,150 mark, then I think and if it closes below those levels, then I think you should look to exit. Because then most of the indicators would start to get into a corrective phase for ABB. So it's much better that you have a stop loss at 3150 closing basis for ABB. In case if the stock corrects, then look to buy back again the stock at lower levels. Maybe 3000, which is the 200 DMA, could be a better level to buy. So that's a better strategy rather than just holding on to the stock as of now.
All right, this one is coming from Anjali. She's writing to us from Nasik. She wants a view on Gayatri projects, and this one from you, in fact, Avinash. How is this one looking for the long term?
No, I think Gayatri projects have been facing a lot of liquidity problems. In fact, they have defaulted on some corporate loans. I would believe that despite a very strong order book here, I think execution has been very poor. So I think, rather than being in a company which has got a lot of significant headwinds now in the very near term, it's better to shift to some other company, especially, from promising sectors like auto or private sector banks. That would be a better switch. But Gayatri projects is unlikely to give any significant upside in the very near term.
Avinash, the next question is from Hemant, and he has shared a bit of a long list of shares, and he wants to know which one of them you find the best for the long-term perspective, and he should stay put. He has HFCL, Sterlite Tech, Tejas Star, as well as Indus Star. These 4 counters in his portfolio, and all of them are at loss. So what's your advice?
Well, I think amongst all these 4 stocks, Shrishti, Tejas Network seems to be the best positioned. Here, Tatas have taken a minority stake, and I think looking at the kind of hardware requirements for 5G rollout, I would not be surprised that over the next 2 years, you're going to see a lot of increase in the top line as well as profitability for the company. The company has also made a very conscious effort in improving its working capital, which on the about a couple of years back was extremely bad. So I think you're going to see a lot of re-rating here. So I would suggest that if the investor can hold on for the next 2 years, he could even think of averaging Tejas Networks. But the other 3 stocks, I am not positive. I would believe that these other 3 stocks he could possibly exit and shift into some other promising sector, as I mentioned earlier. But Tejas Networks he can definitely buy on decline. Definitely a very good promising opportunity.
All right, one more coming your way, but I believe we've snapped your line once again, Avinash. So let me hold on to this query. Let me take another one to Kunal. This one is from Murthy. He's writing to us from Gurgaon, and he has Indian Hotels at an average price of 320 rupees per share. He's asking what's the potential target that you are seeing for the next 60 days?
Wow. So for the next 2 months, I would expect the stock to be in a range, nothing major happening in terms of the very short-term timescale charts for Indian Hotels. The stock is trying to establish a range, consolidate, and digest the gains the stock has seen over the last 1.5 odd year. From 160 levels, the stock at one point had jumped up to 340 odd mark till end of 2022. So I think it's just about going through time-wise correction. A better level to add for Indian Hotels would be, say, closer to 300 mark. That's where the stock tested, I think, a month or so back and bounced off from those levels. It also, I think, coincides with the long-term average for Indian Hotels. So a better level to buy or average would be 300 levels, but at 320 plus when you've bought, I think you should look to hold on.
Okay, that's on hold coming in. But Kunal Subramaniam from Chennai wants to know, can he enter Federal Bank for a medium-term perspective, and what will be the target, if you have any, for the medium term?
See, I think after the recent sell-off, one thing is certain for Federal Bank, at least in terms of charts, that the stock is not going to recover in a hurry unless there is any kind of a news flow which is attached to the stock price. Because when you look at this over the last 3 or 4 months, the stock has been making a pattern of lower highs consistently. So earlier highs were closer to 143, then the recent high was around 138, and the very recent high the stock had made last week or so was 135. So this propensity of making lower highs is indicative that the stock is or this downtrend is here to sustain for some more time. So I think you should not be in a hurry. If you're looking to buy, use corrections to your advantage. So maybe a 5%, 7% correction on an average should be a decent starting point for Federal Bank.
All right, one more coming your way, Kunal. This one is from, don't have the name of the viewer, but the viewer has Wipro, 383 shares at a price of around 591 rupees per share, suffering a loss right now. What to do with his holding? He wants your views on this.
See, I think if you've managed to hold on to the stock from 590 odd levels, which means you've actually caught the stock at the top end of the price rally for itself. Now, first things first, I think you had to have a stop loss in place, whether it's a 10% stop loss or whether it's a position size based stop loss to your trade. Nevertheless, now at current levels, at current levels, the downside looks to be more in terms of time-wise correction over for most of these IT names. These stocks can go into a 2%, 5% or even a 10% kind of a correction, but since you've endured most of the pain, I would suggest to hold on to the stock as of now. Possibly in the next couple of quarters, I would expect strong revival to come back into these IT names because the price-wise and the time-wise correction seems to be getting over for most of the stocks. So earlier, for example, in 2022 second half, most of these stocks were showing signs of correction. Right now, there is a divergence. Some of the stocks have recovered, some of the stocks are trading sideways, and very few stocks are showing signs of weakness. And that divergence is going to probably improve going forward. So I think in that regards, the prospects could be better for Wipro than what it is right now. I would suggest a hold.
Okay, interesting take. That's an hold coming in on Wipro when we see a lot of IT names under pressure today after the TCS earnings. But for the long term, Wipro is definitely showing good momentum. But moving on, and Avinash, the next question we have from Rakesh, and he's holding share of AGI Greenpack. He's holding 700 quantity at a price of 272 rupees. Believe that this is a low, having quite a low volume, but he's sitting at a profit. So he wants to know the long-term view on this one.
No, I think, see, this is a largely illiquid counter, but I think considering the fact that, he's made a little bit of profit, I would suggest that, at least book partial gains because typically, what we have seen is these mid-caps have a very volatile kind of movement in the market. So book little profits and definitely, looking at the kind of medium to long-term prospects of the company, he can hold on the rest quantity for the next 12 to 15 months. But booking profit in this mid-cap is essential because the market is extremely volatile and we have seen that the earnings trajectory for this company has been a lot of unevenness and a lot of volatility. So part of profit booking is definitely advisable.
One more coming your way. This one's from Vishwanath Nair. He's writing to us from Cochin and he wants your outlook on two counters. One is Advait Infra. I'm unsure if you track this one, and the other one being Campus Activewear.
I think Campus Activewear is definitely a good long-term kind of investment and a good hold, considering the fact that they are a large player in the sports footwear segment. They did have a little, a rough quarter three, but looking at the kind of product bouquet which they have and the kind of headroom for growth available, I would believe that Campus Activewear can give you decent returns over the next 12 to 18 months. As far as the other company, Advait Infra, is concerned, unfortunately, I don't track it.
Okay, Kunal, the next question is for you. Love Sharma is holding 100 shares of CESE at a price of 77 rupees. He wants to know the target for the next 6 months.
So I would expect the stock to in fact continue to drag a bit more lower from current levels. My sense is that if the stock is unable to break past about 70-71, which was the previous swing high last week or so, then the stock may correct back towards 62-64 zone for itself. So I think a better level to trade the stock should be about the breakout point of 70-71, and on the downside I would expect the stock to correct towards at least 62-64 levels.
Okay, this one comes from Sudha and there are a couple of stocks that she's asking about, but I'll try to restrict it at least to one or two, Kunal. What she is asking is, does it make sense to shift money from loss-making large cap counters to a small cap names just for growth potential? So she's asking whether she should exit Ambuja Cements, Asian Paints, Pidilite, and look to buy TD Power or Torrent Power, Godrej Properties or Deepak Nitrite instead. And this is for a little longish term.
So ideally, as a thesis, I would not advise to try and book large cap stocks and then go on to smaller cap names, because the allocation would tilt significantly. Your portfolio balance, the skew of your portfolio tilts significantly. But on the basis of the stocks which you've mentioned, like Ambuja Cement, Asian Paints, Pidilite, etc., these stocks are going through their own set of struggles. So yes, for these stocks you may probably make that switch, but I would not advise switching out from these stocks towards the high beta pocket in the smaller cap name. I think you can still switch on from large cap names to the large caps universe itself. Why not look out for few larger cap names, for example, from the banking names, something like which has recently popped up on the charts. Kotak Bank has recovered quite smartly. That looks attractive at current levels of 1800 odd. Then you have ICICI Bank, which has been a more of a formidable bank, done reasonably well for itself. And so I think the skew from large caps should shift towards large caps rather than small caps, which is what I would suggest.
Okay, moving on, and Avinash, the next question is from SK Saran, and he's just observing the difference between Tata Motors and Tata Motors DVR. He wants to know that since the difference is quite large, so going ahead, do you expect this to narrow down, and also any target price for Tata Motors DVR specifically?
No, I think normally, Shrishti, the difference between the Tata Motors frontline share and the DVR share is about 20%. And I would believe that our near-term kind of target price for Tata Motors is about 475 to 480. So I think clearly the DVR option looks pretty attractive. If the shareholder is not interested in voting rights and just wants to make a reasonable risk reward on the price factor alone, then I think he can definitely buy into Tata Motors DVR, because our sense is that over the next 12 to 18 months we see a very long kind of earnings visibility both for the domestic business as well as for the CLR business. So I think Tata Motors DVRs could definitely catch up with the frontline share. It's a matter of time.
All right. This next one that I have is from Rajeshwari, writing to us from Chennai and Kuna. Rajeshwari has ICICI Bank, 185 shares at a price of 795 rupees per share. She is checking whether she should continue to hold on to it or book profit and exit this one. She's been holding it for the last 16 months.
I think you should look to hold on. I don't see any reason why you should be looking to book out ICICI Bank. It's been one of the formidable names, done exceptionally well in both the price uptrend for the banking names and even in this last 4 months of correction for the overall market. So I think in that regards, it's a formidable name. You should stay put with the stock.
Okay, Avinash, the next question is on a pharma name, the sector that is seen to be buzzing. The question is from Amit, and he's holding 1,000 shares of Ajanta Pharma at a price of 300 rupees. He wants to know the outlook on the same.
No, I think he can continue to hold on. See, Ajanta Pharma has been a large player not only in the domestic market but even on the export market side. And I think the company has been rewarding its shareholder also quite handsomely. My sense is that looking at the current price, definitely the risk reward appears good if the investor can hold on for the next 12 to 18 months. So I think he should hold on and keep a time frame of at least 12 to 15 months. I think the risk reward could definitely turn better if he has a time horizon of this in mind.
Okay, this one is coming from Alok Dey, writing to us from Kolkata, and 420 shares of National Fertilizers at the price of 61 rupees per share. What should the strategy be now, Kunal? Should he continue to hold on to it or look to exit?
I think you should look to hold on. The stock has just recently given a breakout of a multi-month high, so which means that the momentum is just seem to be started off strongly on a monthly time scale. I think that's a good strategy to hold on.
Okay, Avinash, since all these auto counters have done pretty well for themselves, but one of the key laggards was Motherson Sumi. One of the viewers who didn't share his name is holding 700 shares of Motherson Sumi at a price of Samvardhana Motherson. Now the name has changed, at a price of 78 rupees since the past 3 months. He wants to know what is the outlook and whether he should add more with the next medium to long-term investment horizon.
Yeah, I think if he has a 2-year kind of horizon, then I think he can definitely add on to Motherson Sumi. I think that is Samvardhana Motherson. Clearly, I think the company has faced a lot of headwinds because they have a large exposure to the European and the US markets. But I think the management commentary has been very solid. The company maintains that by inorganic acquisition, it tends to grow much faster than organic growth. And I think as the domestic industry grows, obviously with more and more companies launching new passenger car models, because they have a large presence in the passenger car segment, I would not be surprised that this company would also get re-rated in a matter of time. So I think one has to keep a little more patience here because the stock has been a slow mover, but fundamentals definitely pretty strong.
Okay, this next one is coming from Srinu, writing to us from Vijayawada. And Kunal, Srinu has purchased Tata Power about 300 shares at a price of around 220 rupees per share, as well as BEL about 700 shares at a price of 101 rupees per share. She wants to know short-term targets for both of these counters.
So BL, you can look out for maybe 112 as a 110 to 112 as a target for the stock over the near term. For Tata Power, I would recommend a hold. The stock is below your cost price, but I think it's still trying to just go into a time-wise correction at this sub 200 mark. So maybe another month or two of consolidation, but the stock would probably get into a breakout mode maybe by the second half of 2023. So I would suggest a hold on Tata Power as well as for BL, targets of 110 to 112.
Okay, moving on, and Avinash, I'm not sure whether you will be able to advise him or not, but Karthik is holding shares of NDTV, quite a volatile counter, at a price of 366 rupees. He's sitting at quite a huge loss. Is this a good time to average?
Unfortunately, Srishti, I don't track the stock, so I won't be able to give you a view.
Sure, no worries. Moving on to the next question, and Kunal, the next question is on Welspun Enterprises. One of the viewers named Kunal itself is holding 2,000 shares at a price of 122 rupees. What should he do in this one?
So I think we should look to hold on. I think the last 1 year approximately has been quite decent for Welspun Enterprises. From 65, 67, the stock went up to as much as 175, and now it's back towards 127 mark. The good part is that over the last 1 month, the stock is just trying to get into a time-wise correction. The selling has stopped for Welspun Enterprise, and the stock is just trying to form a bottom at this 120 odd mark. So it seems to be that a good zone where the stock may eventually take a support as well as bounce back from these levels. And if and how it's a longer term bounce back which shapes up for Welspun Enterprise, we may look out for a retest of 170 plus mark for the stock. So hold is what I would recommend.
Okay, Kunal, one more coming your way. This one is from Dikshita. Wants to know about NMDC, if it can be averaged at current market price. Our average cost is about 120 rupees per share.
So I think 108 could be a better zone to average. That would also coincide with the 200-day moving average. In fact, just last 2 or 3 weeks back, the stock retested its 200 DMA, this 108 mark, and from there it bounced off to 114, 115 mark till yesterday. So that's one of the critical levels to watch out for. 108 is a better level to buy or average.
All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of his stock-related queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of his stock-related queries. And this one is coming from Balan. And Balan has Anantraj, DLF and Brigade Enterprises, Kunal. And he's already making a good profit of about 5 to 10% on all of these counters. He wants to know, does it make sense to exit any of these counters and switch to something else, or continue to hold on?
I would suggest to continue to hold on. All these three stocks have recovered quite smartly. Real estate pack is getting into the thick of a high beta uptrend. We've just seen the last 1 week or 2 weeks where the prices have started to show signs of improvement for themselves. But I think there should be a long way on the upside for the entire pack. I would suggest a hold for all three of the names.
Okay, Avinash, the next question is from Arun, and he's holding shares of Manali Petro at a price of 140 rupees. Wants to know, is that a hold or sell at this point in time? The investment is almost half from its entry level.
As far as Manali Petro is concerned, it's a company which makes import substitute products. But unfortunately, its profitability is largely dependent on crude oil prices. And with crude oil prices moving up sharply, we believe that profitability will continue to be under pressure. I think it's better to switch to, a banking company like IDFC First or maybe a federal bank where the risk reward will be better.
Okay, another one coming your way, Avinash. This one is coming from Venkatesh, writing to us from Indonesia. And he wants to know if he can buy GMDC for the long term.
Yeah, I think GMDC is a company where, it makes lignite, which is a very large, input in the making of cement. So I believe that, this is a state entity, has been rewarding its shareholders pretty well. So I think if he has a 2 kind of plus kind of time frame, then definitely he can accumulate at the current odd levels.
Okay, moving on, and the next query that I have, Avinash, is coming from Vivek, and he's holding shares of ONGC, GAIL, and NTPC, sitting at a profit in all the three names. But he wants to know which one looks the best for a long-term period where he can continue and stay invested for the next 18 months.
No, I think clearly ONGC and GAIL look pretty well positioned. In fact, ONGC will benefit significantly from the uptick in global crude prices. I believe that global crude prices are on an uptrend, and hopefully, in the next couple of months, if everything goes well, then we could see a further spike in the crude oil, price trajectory. Overall, I think GAIL is looking interesting because once the Kirit Parikh committee recommendations have been approved, gas transmission is also going to be a very big opportunity. So I think these are the two stocks which you should hold on. I think the next 12 to 18 months outlook for both these companies looks pretty good.
This one is from Ramamurthy from Bahrain. This one is for you, Kunal. He wants to know about Reliance Industries. He's wondering whether he should look to average. He has about 200 shares at the price of 25.10. Also, he wants to know whether it makes sense to buy MTAR Tech.
Well, yeah, I think you can look to average Reliance Industries. So I think at current levels, the risk reward would be in favor. 2,450 would be an immediate target. I think just a couple of days back, I highlighted this for Reliance Industries on the Chartbusters. So that's a near-term target which you can look out for. Even if you're a longer-term time frame investor, you can look to hold on to the stock from that time scale as well. MTAR Tech, on the other hand, is also going through a strong breakout mode. I think if I'm not wrong, it's on the verge of a bigger breakout with this 1800 mark. So you can look to start buying at current levels and look to add on the breakout at 1800 mark for MTAR.
Okay, Avinash, Bharat is holding shares of Hudco and sitting at a loss of 10% right now. So he wants to know, is that a hold at current market price? Any hopes on recovery? Or rather, he should make a switch to EID, Parry or Polyplex. Is that worth?
Definitely, EID Parry would be a much more interesting bet, considering the fact that they are now not only in sugar but also into ethanol and also in the confectionery market. They also have a sanitary division. So I believe looking at the kind of opportunity ahead, I think EID Parry would be a better switch. Looking at the fact that over the next 12 to 15 months, he could make a decent amount of money in this counter. So I think a switch would definitely be in favor of EID Parry.
This one is coming from RK. He wants to know an entry price for KPIT, Kunal.
So KPIT Tech, I think I've been advising that to wait out for maybe one more leg of correction. I think 750 could be a better level to buy in case the stock corrects to that point. That's a good zone to buy the stock rather than participating into this upward trend, because this could probably be just a bounce to the stock after that sharp correction which it had seen from 920, 930 levels. So would not like to participate on the upside, but in case if it corrects towards 750 mark, better zone to buy.
Okay, Avinash, Radhakrishnan is holding shares of Subex from a price of 56 rupees. So any hopes on recovery going forward, and if you could share the medium to long term outlook on the same?
I think Subex has not delivered on the numbers despite fact that there were reports that the company had turned around. The company is a very large player in the telecom, fraud management services space, but unfortunately, it has not been able to scale up its revenue and profitability. And the investor seems to have purchased this share at the peak high level. So I would believe that it's better to exit from this stock and look at some other promising stock where possibly the risk reward would be better. I think ideally stocks within the auto component or maybe within the private banking space would be better bets compared to Subex.
Right, with that, let's kickstart with the rapid fire then. And the first one coming your way, Kunal. This one's from Siva from Chennai on GNFC, a buy at current levels.
Yeah, I would suggest a buy at current levels.
Okay, Avinash, Chandrasekharan is holding shares of Marico from a price of 545 rupees. Wants to know, is that worth holding, and the target price for the next 1 year if you have?
No, I think Marico definitely has been a slow mover, so you should definitely hold on. Expect a 10 to 12% upside over the next 12 months.
Okay, Kunal, what's your take on AU Small Finance Bank? Jayashree is asking, she's holding 100 shares at the price of 650 rupees per share.
Continue to hold.
Okay, Kunal, Vivek is holding shares of Ingersoll Rand at a price of 1900. What should be the target for the same, and can he hold for the next 1 year?
Hold, and near-term targets you can keep at 3,000. Higher-term targets you can probably keep at 3,300 as well.
Okay, Avinash, this one is from Divya. She has 500 shares of GIC at a cost of 160 rupees per share. Wants to know whether she should look to exit from that and buy Godrej Properties.
Yeah, I think she can exit GIC and look at Godrej Properties even at the current order level.
Okay, Avinash, Anand wants to know, is this a right time to enter PCBL with a 2-year investment horizon?
Yeah, I think PCBL definitely has corrected sharply, and from a 2-year horizon, definitely one could expect a decent risk reward.
Okay, talking about Infosys, Kunal, Tilak wants to know that does it make sense to hold on to Infosys? Today is the earnings, so all will depend on that, isn't it?
Yeah, of course, it will be dependent on that. Difficult to anticipate pre-results. Post-results will probably get a better hand.
Okay, Lester De Cruz, Avinash is holding shares of SAIL, 9,000 shares at a price of 98 rupees. Wants to know the target for the next 12 months and the outlook.
No, I think he could continue to hold on. I would believe that here the upside could be restricted to roughly about 15 to 20% over the next 12 months. So continue to hold.
Okay, Avinash, Rajendra from Bangalore wants to know which is the best stock in the power sector.
I think in the power sector, Tata Power looks well positioned. I would believe that on any dip, he should accumulate well.
Okay, with this, it's the time's up on the rapid fire as well as buy now, sell now. Thank you so much, Kunal and Avinash, for joining us today on ET Now and helping all our viewers with their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together. But you don't go anywhere because the market action and all news and updates continue just after this quick break. And markets at noon will be taking the action ahead.